Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 2nd, 2009 through Friday, March 6th, 2009. Well, let's discuss last week first of all, folks, as we get into kind of the crux and the overall issues in this market right now, because it's really been quite a dramatic last couple weeks in this market. I mean, it's been pretty ugly, let's be honest. We've taken out November lows on the S&P and on the Dow. NASDAQ still resides about, a little less than 100 points above that level from November. So you're still seeing a little more strength in technology. The question is, will that last? Ultimately, technology can be very, very sensitive to economic issues, and we'll have to see if it can still hold up. Now, the overall market still remains oversold. The question is, how long will it remain oversold before we get the bounce, or at least a decent bounce in this market, more than one day up, because we still haven't seen much more than that across the board. Now, what we're going to start out with, first of all, is just looking at this overall chart, the charts of the market, the SPY, which we're going to focus on, and take a little bit of a look at where the market ended on Friday, what happened on Friday, and then set ourselves up for the intraday on Monday as well. Now, Friday we saw the Dow down about 120 points, or 1.66%. The NASDAQ was down 13.6 points, or 0.98%, and the S&P was down about 17.74 points, or 2.36%. February was an ugly month for the markets, guys. There's no doubt about it. We saw percentages upwards of 10% plus evaporate from this market. And just to show the daily quickly here on the SPY, really you're going back right in here on February, to the start of February, right in here, and look at that drop on the markets. All right, definitely an ugly drop in February, almost straight down. We'll see if the sun can come out tomorrow, if you will, to quote there, and again kind of feel whether or not we're due for a bounce in March, or do we see more lows. Now, we have taken out November lows, and again, that's going to be the big question. Do we continue to see more selling come Monday, Tuesday, Wednesday, or whether or not we see a little bounce come in this market? Now, let's talk a little bit about this Friday chart, because there's some key levels I really want to have in on this chart that you're going to need in for Monday. Now, those of you that follow the free videos on YouTube, on Facebook, all over the internet, wherever you may be viewing them, the key here is knowing your levels and keeping the levels in each day. I erase them because I like to show you how I get them for each video, whether it's an intraday video or the weekend video, and I really think it's important to show you guys because it's all about learning. I mean, let's be honest, guys. We're all here to learn. You can see one level drawn in there on the chart from a while ago on the 24th, but really, the market this week is all about the Monday. The Monday low here on the chart is a very key low all week long, because we bounce off of that low on Tuesday. So you know if we ever come down, this is going to be support on this market. So it's very important to have these levels drawn in on the charts, and I'm going to actually do that here with you guys now. So let's first of all, let's take the closing low or gap fill, and I got to be exact on this. I want to be as exact as possible. There we go. Right there, and draw that all the way across. All right, keep it straight, because we'll have to extend these further in the coming charts as we squeeze it over to current times. And as straight as possible is really what you want to do here, guys. No doubt about it here. Keep it definitely as straight as possible. And you know what? Throw this one in as well, and we'll see why that one plays an important role. So all of a sudden, you're taking all your lines. Here's your Monday close line, your pivot low on Tuesday, your secondary pivot on Tuesday, and your third pivot on Tuesday. All pivots up. Now, this one was the big one, obviously, before when Bernanke kind of gave his testimony to Congress on Capitol Hill, and that's when you saw that market really take off, when he seemed to give clarity. But you know what? Once the news on Friday hit of Citigroup and the 40% stake, the government was exchanging their preferred shares for common shares, the market all week long got a little skittish, and it was just not a pretty sight. You actually had an interesting thing on Wednesday happen. You had a WV pattern. All right, and remember this, I went over this multiple times. Here's your W pattern, so your W, and then your V pattern, which this is always a bullish buy. Whenever you pull back, especially into moving averages on the V pattern, that's got to be a buy. Beautiful completion of that. The only negative here is the completion of the V pattern on the WV pattern led us to a MA pattern, which is an extremely bearish pattern. So all of a sudden, here's your beginning of the M, and again, maybe I'll just draw it over it so you can see the double lines, and here's your M pattern. All right, that's your M. What's your A? Where's it go? Right up into necktie. Remember how the V did that right here before blasting off. Same thing applies, and what happens? The market gets slammed down. You get a little bit of a bearish flag pattern, and the market closes at its low. Now, why do you think this is a significant point? That's right, folks. Remember this high line? We talked about the pivot on Bernanke. Let's extend that, and there you go. So all of a sudden, this line extended gives you your low point here before your bounce and then the closing low. In addition, going to Friday's activity, notice the pierce here. Where does it go? Right to that point. This is why trendline analysis is key and will end up making you rich if you're able to master it. I mean, there's no doubt in my mind. And that's why it's important for those of you out there that watch these free videos. If you really want to get more in depth in this kind of stuff, you really should join the Research Center. $49.99 a month. We give out so much information, so much in the way of educational stuff, market guidance. It's a learning experience you'll never forget and will improve your trading probably tenfold. Now let's continue to extend these lines, folks. You'll see why it's so important. Try and get them as straight as possible here. There we go. And then we'll take this one again and extend it. And I'm doing them as best I can here, obviously. But we just want to make sure they're approximately correct. And there. Okay? So now you have your lines virtually across the board here on the charts. And you'll see why they're so key. I'm even going to extend this one a little more here, and you can see why that one's so key. The rest of them, this one actually is pretty important too. As you can see, it comes out there. All right, now these are your basic lines going back from Monday and Tuesday. Okay, Monday, Tuesday pivot points as well. This is the Monday low, then Tuesday pivot, first pivot, second pivot, third pivot up. The third pivot gives us our low on Thursday, where we closed right on it on that bounce off the A pattern. The A pattern actually continues here on the gap down to continue to be bearish. MA pattern is very bearish. WV pattern is very bullish. All right, it's a shame that the WV pattern went right into a double top M. And remember that double top right here, guys. There's your double top on your M. That's a horrible signal. Whenever you see that and you see this M pattern starting to form, you got to start to shake and shudder. Now, just keep in mind, guys, so here's your levels. All right, notice on the market bounce on Friday, you go right up into your first level, and then you pierce the first level on the next candle and hit the second level, bounce down, and you can see how those levels are working as resistance. Then finally, you get through the level, go to the third level, and then bounce back down again, hit the third multiple times before retracing back down. Then all of a sudden you make another attempt blowing to this upper trend line. You kind of trade on top of the trend line right there and eventually fall back down right to the 20. Bounce up again. You're having some resistance here, obvious resistance when you move up and you can't get through it for the second time. Fall back all the way down to this first pivot point, this first trend line. Get a good reversal candle and then rally all the way up. Touch gap fill, which is also this upper resistance line. At that point, fail, come back down, attempt again, and then ultimately fail and close at the close of the day. Now, the trend lines are as follows, guys. There's more trend lines in this chart you have to know, okay? Very imperative. First of all, take your high right here. Take it right there and extend it all the way down. Take it to the high of the secondary point on that same day and extend it all the way down. So you take the high here, draw it to the secondary high right here, all right? And then look at that. All of a sudden, this is giving you your upper major resistance as well. So that's forming another resistance pattern. And again, remember, guys, these lines will hold true. I mean, a lot of people wonder, well, you know, it's great to draw it on this chart, but how does it affect the next day? It affects it immensely. Just look at how these lines from the past came back to haunt Friday's action. Shows you just as well. You want to keep these lines in. If we gap lower, you got to find your new lines. There's always lines on the charts. I have so many lines in on my professional chart all over the place, and all of a sudden they come back into play months later even. So it's very key, guys. Notice that line there. Then also you want to take your low here from the pivot on Thursday. Take that low and draw it to the low on the Friday, and all of a sudden you have a new line that could be in. If we gap down on Monday, this one could be in play. And notice again how it's the low pivot on Thursday to the low of the day on Thursday, which comes into play right here as resistance on Friday. All right, and again, notice the parallel lines. Everything has symmetry in the market. You got to remember that. Symmetry, very key, guys, in this market. Now, take a look at this. You have a nice trend line that was developing right there. That comes into play later. When you bounce up, you go right into that line. Notice how it's connecting the low to the low. And don't forget the double bottom. Double bottom, very key. We close really right on that double bottom from the beginning on Friday's low. And where do we end up on the end of the day? Right there, tagging that level as well. Very key lines. These are all key lines. You're going to want to keep them in your chart. Looking at the 60-minute very quickly here, folks. We do not have a lot of time. You can see, again, patterns not pretty. Here's your double bottom. We want to see where we go on Friday. Do we continue lower? Trend lines as well. You can see some multiple trend lines here, even looking upwards of here. Here's a pretty big one, it looks like, right here, from the high point down and you couldn't get above it. You can see that trend line really holding strong. If we bounce up, that's going to be a very key level to watch. You're going to want to watch that very closely. Just going into the earnings calendar for this week, folks, and economic news, you can see the real big thing this week. You have ADP on March 4th, ADP employment change, and then also on Friday, unemployment rate. That's going to be huge. I have a feeling we're going to be over 8% unemployment in this market. That is not going to be pretty. All right, folks, come join the Research Center. We also have a webinar on March 21st. You can sign up for that on our website. Hope to have you with us. Take care.